Many people don't realize that there's almost 50 applications that have been made with the SEC to start regulated cryptocurrency exchanges. And while the exchanges that we rely on today are regulated, they're regulated under money transmitter laws, which are admittedly really arcane and don't really speak to the true nature of cryptocurrency trading. So, the question becomes, and there's a lot of schadenfreude about, well, what's going to happen when the regulators, when the SEC starts regulating these cryptocurrency exchanges? It's going to take away the smaller investors' access and things of that nature. And here's why that's wrong. In the real financial world, right, in the traditional financial world, the New York Stock Exchange, for instance, if you go and you place a trade, it gets routed to a specialist, and the specialist is basically there to make liquidity, right? So that specialist will take your block order and do what it can to close that order out as quickly as possible. NASDAQ is not quite as efficient because they have market makers. And so market makers are typically liquidity providers, but what they'll also do is hold long and short positions of any given stock. So what may happen is you may put in an order for, let's say, $10, and the market maker can fill that order. That's a purchase order $10. That market order can fill that market, but then turn around and flip it and make a difference. Say if they sell it for $10, they can go ahead and buy it for $9.75 because they're controlling the bid ask, right? So they make that spread, they make the difference in the spread. And there's a lot of consternation about market making in NASDAQ, but NASDAQ tends to be the more liquid market. But you do have market makers who are in there, and they're in there for a profit. They're not simply there to provide liquidity like specialists are in the New York Stock Exchange. They're there for their own purposes to facilitate liquidity, but also to earn a profit while doing it. And it tends to work better than the New York Stock Exchange model. So now you take the example of a cryptocurrency exchange like Kraken or Bittrex or what have you, and there's this belief that they're liquid, fluid markets, and they're not. I mean, for all like the technical issues, like where Kraken's down for 5 days, forget it. That's nothing, right? Like that's not even an issue. It's day to day how efficient the pricing is, and those markets are manipulated time and again. Most notably with spoofing, where parties will put in larger wash trades, meaning trades on each side, buy and sell of similar value, to create the appearance of volume, to create the appearance of momentum, either up or down. And it's especially notable when you get away from the main coins and you get into some of these altcoins, especially the thinly traded ones, because they're so susceptible to market manipulation. And spoofing is the primary vehicle that people use to generate this faux momentum. I mean, if you look at like a Bittrex, you'll see these obscure altcoins that will have these 2-3 day runs where they go up 100%. Well, those are wildly inefficient, and they're the victim of market manipulation every single time, without question. There's just no way that volume pops up out of nowhere for 1 day or 2 days and then goes back away without somebody getting together and coordinating wash trades and coordinating market manipulation to make that happen. So the reality is an SEC regulated exchange is what you need, right? Spoofing is almost impossible to really accomplish at a NASDAQ level without untold millions of shares and untold millions of dollars to do it, right? I mean, it's very difficult. And you have market makers who are there to sort of coordinate that and keep that spread, that bid and ask, that buy and sell, to a reasonable level, which obviously they profit from, but it also prevents things like spoofing and other tactics that you see when you just have a simple order book, right? You have a simple order book in all these exchanges. There's nothing unique to them in the cryptocurrency world, right? They're very simple software that are very susceptible to manipulation, and there's no regulation, right? Because they're all governed by state money transmitter laws. Like the guy who wants to send Western Union from his liquor store, I mean, that's the license you need. There's nothing to prevent them from doing it. So the reality is I would welcome some type of actual regulated exchange by an actual national securities regulator like the SEC. States aren't willing or even able to do it. And right now you've got wildly illiquid and wildly manipulated markets, and quite frankly, for cryptocurrency and cryptocurrency trading to become viable and become an asset class that so many people think it could be, that you need this liquidity market, and you need players in the market, such as either a specialist or market maker, to make those things happen. So, for all you traders out there who, are in this space, you're not getting best price, right? You're not getting best price because the mechanics aren't there to necessarily get you best price. Just because you see it in an order book doesn't mean that those orders are real. It doesn't mean that those orders can be filled. So, trade with caution, but, I think on the whole, what we need as a community is really for there to be a regulated exchange that prevents the market abuse and also provides some baseline level for listing these cryptocurrencies for trading. So check me out. Email me at tracyfirm, TRACYFIRM.com if you have any questions. Talk to you.